What if the UK crypto market was about to change forever? Well, that's the question on everyone's mind right now because the Financial Conduct Authority, or FCA, has just announced a sweeping set of proposals aimed at cleaning up the crypto sector. And while this might sound like just another round of red tape, in reality, these rules could reshape how crypto companies operate, how investors interact with exchanges, and even how the UK positions itself on the global crypto stage. So today we're diving into what these new FCA regulations mean, why consumer protection is at the heart of it, and whether this is the push crypto in the UK needs to finally move from the shadows into the mainstream. So, crypto in the UK has always had a strange relationship with regulation. For years, the government has promised to make Britain a hub for digital assets, but at the same time, watchdogs have cracked down hard on promotions, things like advertising and retail access. And the result has been a kind of confusing mix of opportunity and uncertainty. So now the FCA is trying to put things on a clearer path. They've issued a proposal to expand regulation in the crypto sector. And really, there's two main goals here. First is to protect consumers from harmful business practices and also improve the operational resilience of crypto companies. So, in other words, they want crypto firms to meet the same minimum standards that traditional financial institutions are already held to. And the new proposals go far beyond the current financial promotions regime because, here's what's on the table. We've got consumer protection rules. So crypto firms will need to handle complaints in a structured, transparent way, just like banks do. So that means if you lose money because of poor service or misleading information, you'll have clearer recourse. Also, stronger standards for business practices. So companies will be required to prove that their operations are sustainable, not just this, fly-by-night schemes designed to grab deposits and disappear. There's also financial crime prevention. So the FCA wants to clamp down on money laundering and scams, which continue to tarnish crypto's reputation, and also promotion of legitimate assets. So by ensuring that only regulated firms can promote crypto products, the FCA hopes to basically build trust with both retail and institutional investors. And importantly, the FCA has released a consultation paper. I mentioned this in yesterday's video as well, but this basically means that they're inviting the public, the industry, and investors to give feedback before finalising any rules. And the final regulations will most likely be rolled out in 2026. So now you might be thinking, well, is this just another layer of bureaucracy or is this the real deal? And I mentioned yesterday David Gill, who's the FCA's Executive Director of Payments and Digital Finance, I think, and he's been very clear. He says that his aim is to develop a sustainable and competitive crypto sector in the UK. So that means a market that's not just safer for investors, but also strong enough to attract innovation and international business. This is what they're saying. And also, the FCA is openly admitting something important here. These regulations won't remove all the risks of investing in crypto. Maybe that's the point. Risk is part of crypto, but what the FCA wants to do is reduce kind of the unnecessary risks. So the risks of dodgy firms, misleading promotions and unfair practices. Now, if we take a look at the data, because the FCA's own research is actually telling 12% of UK adults now own crypto, which is up from 10% in previous surveys. So that's around 1 in 8 people, which is a significant slice of the population. 93% of people have heard of crypto compared with 91% before. So awareness is now almost universal. But here is the concerning part, because 10% of investors admit to doing zero research before buying in. So no due diligence, no sort of fact checking, they're just straight in. And so this combination of rising ownership, high awareness, but low research is exactly why the FCA feels that regulation is needed. And the crypto industry has matured, but many retail investors are still diving in without the tools to protect themselves. And according to the FCA, it's not all about restrictions. In fact, some moves by the FCA have been welcomed with open arms by the crypto industry. For example, the decision to end the ban on crypto ETNs for retail investors, that's been praised as a sign that the UK is willing to adapt. Because exchange-traded products make it easier for everyday investors to gain exposure to crypto in a regulated way. And this change could bring in new participants who previously stayed on the sidelines. And if you combine that with the push for stronger consumer protection, and you can see kind of the bigger picture, the UK doesn't just want to control crypto. It wants to build a market where trust and innovation can coexist. So what is the timeline? Well, the consultation process is currently underway, and the FCA is encouraging constructive feedback from all sides, businesses, investors, the general public. And these insights will shape the final framework, which is expected in 2026. So until then, we'll likely see more discussions, debates, and lobbying. Some crypto firms will argue that too much regulation stifles growth. Others are going to welcome the clarity. But either way, the FCA seems determined to create rules that balance consumer protection with market competitiveness. So here's the bottom line. The FCA's new proposals could finally bring crypto in the UK closer to the same trust standards as traditional finance. So that's huge for consumer protection and potentially transformative for adoption in the UK. But here's the big question: will stricter rules drive innovation or drive it away? Will the UK become a true crypto hub or just another heavily regulated market where innovation struggles to breathe? What do you think? Are these rules the future of a safer, stronger crypto sector, or are they just another way to keep investors boxed in? Drop your thoughts in the comments below. I love hearing your perspective and I read all the comments. And as always, if you found this breakdown helpful, don't forget to like, subscribe, and hit the bell so that you never miss an update on how regulation is reshaping the world of crypto. Thanks for watching, thanks for listening, and I'll see you in the next one.